Hi grade 12s and welcome to another video on audit reports under the statements topic. So today we're going to be just trying to see what other kind of questions can come up for you and how to answer those questions. So in this particular question, the first question that had been asked is what type of audit report was given in the sample, and so the audit report was a qualified audit report. As you can see here, I've already stated that it was a qualified audit report, right? And then they said explain why the shareholders should be concerned about this audit report, right? And you can use 2 points, right? And I have many here, multitude, for you to be able to get a feel of what exactly your answer should look like. So we established, we established that a qualified report is a bad audit report, right? We said that it is bad and that no business should want to get this kind of report. Everybody who runs a business and gets audited wants an unqualified audit report because that's the good audit report. It's the green light, right? So what could the possible reasons be for this kind of an audit report? And this is when our reasons come in. Because I think, like I was saying in the other video, audit reports as a topic is a free marks range. It's usually 15 marks, like I said, 10, 15, 20 kind of marks around there. And it's basically based on information you know. It's usually not even doesn't have any calculations involved, amounts involved. It's just about analysis. It's about knowing your work. It's about what you studied, right? Okay, so the first point I have here is there is a possible fraud or mismanagement occurring, right? So the reason why the audit could have come out qualified is because fraud could be occurring, or something is wrong in the management system that is allowing for fraud to occur, allowing for unethical things to occur, right? So this is point number 1. Point number 2 is there's a lack of internal control processes, right? So poor recording of transactions, and internal controls are very important in the structuring of the business and making sure the business runs smoothly. So maybe the report could be unqualified based on poor internal control processes, right? So that's the second one, right? So the third reason why we could have a qualified report is the qualified audit report could affect so the other thing that could happen, because we said the reason why we're answering the question we're answering, the question that we're answering is explain why the shareholders should be concerned, right? They should be concerned because the qualified audit report could affect the price of shares. We spoke about this in terms of the JSE, and that an audit report can affect the value of your shares in the market, and you don't want your value of shares to depreciate or to plummet or to drop. That is a no-no. So that could be something to worry the shareholders. The reputation of the company could be compromised, right? So reputation of the company, because now if you are well-renowned and you're a respected company, all of a sudden your audit report comes out as qualified. What was the reason? Obviously, then that would sort of tarnish the reputation of the company, right? Then the next thing that could concern the shareholders is unaccounted expenditure impacted on their return or profit. So unaccounted meaning something fraudulent, something unethical happened, and the expenditure that was unaccounted for then impacted the amount of return for the shareholders and profits for the business as a whole, and this could concern the shareholders, right? Then there's the last point that I have for you is dividends could have been negatively affected by this problem, right? So this means that shareholders obviously are checking for the well-being of the business, but they also are checking for the well-being of their returns on investment. So their dividends, because this is how they get their returns, dividends could be negatively affected in the sense that it couldn't be, if they have an unqualified report, then it could negatively affect the amount they could get back as their dividends that from the shares they would have purchased as ownerships of the company, right? So like I said, general knowledge, like I said, read the scenario. Don't you ever forget that qualified is bad, unqualified is good. Disclaimer or withheld, terrible. And yes, I hope that this helped you. I hope that this information is going to help you when you're studying. Don't forget to practice, answer past question papers. Even if you don't check, you can check how much you know of each topic by starting off by doing a question paper, so that when you mark your question paper, you can see, oh, I need to go and revise this particular topic a little bit more. But other than that, I hope that these videos help you. And yeah, I will see you in the last video for this topic. Bye.